Hi friends, on 22nd March 2024, I created a video on my channel with a stock called CG Power. At that time, the stock was trading at around 535 rupees level. Now the stock is trading at around 664 level, meaning the stock has gone up by almost 25% in last 3 months. I had actually stumbled upon this stock on a platform called Shoonya by Finvestia. People who do not know Shoonya, it's a SEBI registered demat broker. Anyways, the second video I created was on 12th of April 2023, a stock called Info Edge or Naukri.com. At that time, the stock was trading at around 5973. Right now, the stock is trading at around 6267. So almost 5% gain in last 2 months. And this stock also I found from Shoonya by Finvestia platform. Now today I'm logging into Shoonya by Finvestia and let's see what it is showing me. So right now it is showing me the green stocks that are bullish stock in the next 1 year, while the ones in red are bearish and are likely to go bearish in the next 1 year's time. Again, it's not that we can blindly go ahead and follow this stock list here. We will need to do full analysis before we take any investment bets. So in this video, I'll pick up 2 stocks from this list which are looking bullish, and I will also add 1 more stock from my side. So we'll speak about 3 stocks in total in this video. Before I do that, if you also want to get access to Shoonya by Finvestia platform, all you need to do is open a demat account. Their account opening charges are 0. Their annual maintenance charges are also 0. Essentially, it's a zero fee broker that you can use with multiple exchanges like NSE or BSE, etc. Whether you are investing in stocks or FNO or currency or commodity, brokerage charges always will be 0. You only have to pay statutory charges. Shoonya is SEBI registered platform, so I can trust them with my data and transactions. In case you are interested, I will give you the link in the description or in the pinned comments. The first stock that I'm going to pick up is Deepak Nitrite Limited from this screen from Shoonya by Finvestia. And many of you had left a comment on my YouTube channel that Rahul analyze Deepak Nitrite Limited. So here we go with Deepak Nitrite Limited. Have a look at my screen and you will see in the last 5 years, Deepak Nitrite Limited has given multi-bagger returns 721% up. But you will notice that there is a massive rally here, and then after that there is a massive decline here or sideways movement in the last 2 years. Now we need to understand what has caused this so that we can understand whether in the future it is going to play out or not, whether it is going to rally or whether it can come down. So I've divided this graph into 4 parts: FY21, 22, 23 and 24. And you will see that the majority of this rally has happened in FY21 and FY22, while the majority of the decline has happened in FY23 and FY24. Now, if you look at the data, you will see that in FY21, company's PAT, profit after tax, grew up by 27%. And in FY2022, it grew by 37%. So it grew by higher rate on a higher base. I hope you get the point that it grew by 37% on top of 27% of growth, right? While in FY23, the PAT degrew by close to 20%, minus 20%. And in FY24, it has now come down to minus 5%. So there has been degrowth in FY23 and 24. That's why the stock prices have come down. While the rally, the massive rally that we can see here is largely due to the profitability. Profit after tax has grown up by 27% and 37% respectively in 21 and 22. And if I were to quickly show you the data, have a look at my screen and you will see 2021, the PAT was up by 27%. I haven't made this data up. Let me show you FY 2022. The PAT was up by 37%. FY 2023, PAT was down by minus 20%. FY 2024, it was down by minus 5%. So I've gone through the last 5 years of their P&L account and have presented you this analysis. And if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with content like this for you at 0 cost. You can also consider subscribing to my YouTube member community because I share this sort of in-depth analysis for my YouTube members. Now comes the $1 million question: what drives the profitability? Why the profits are up and why the profits are down? So 2 points that I want to make. When profits need to go high, what you really need to do as a company is you need to command premium in the price at which you sell your products. And that happens when your demand of the product is very high and the supply is low. That's point number 1. And this is what is not playing out in FY 2024. Have a look at my screen and you will see that the management is saying is that when they entered FY 2024, there was a lot of dumping of the products by Chinese. And when low price products are dumped in the global market, then what happens is that the company is not able to demand the premium and hence there is a big dent in the profitability. And Deepak Nitrite is not the only company that has been hit by this badly in FY 2024. Majority of the companies operating in chemical sector, you would anyways know that their profitabilities have been very down because of dumping by China in terms of the global market. While in FY 2023, the profitability was down mainly because of Russia-Ukraine war. You can see the management commentary here. Because of the supply chain disruption, the input cost of the commodities that the company uses to manufacture the products had gone up, and that's why their profitability came down. Now, both these factors are not going to play out in FY 25 and in FY 2026, and that is why there is a likelihood that the company is going to do better in terms of the PAT. Now the question comes, Rahul, why are you saying that these two factors are not going to play out? And the reason I'm saying is because if you look at my screen, you will see that 65% of companies' revenues are coming from phenolics, while 35% are coming from advanced intermediates, which are AI products. And if you look at the commentary by management here on phenolics particularly, you will see that what they're saying is that the demand and supply right now is at the balance stage. It means there is no high supply of the products right now in the market. Therefore, it is at the balance stage, so the profitability is likely to be better in FY 2025. And also when it comes to advanced intermediates, AI, the company is saying that they are now seeing the improved demand in the market, meaning that their profitability is going to go up even in this segment as well. And that is why precisely Deepak Nitrite is likely to show some bullishness in FY 25 and 2026. So if you have already bought Deepak Nitrite and sitting on it and thinking what is likely to happen, just have some patience is what I would say. In fact, when the prices of a stock comes down, this is where big investors start to accumulate the stock. For example, if you look at this pattern here, you will see that in March 2023, promoters started to buy this stock. The stake went up from 45% to 49%. And if I show you the price in March 2023, around somewhere here, January, February, March quarter, the stock was at the rock bottom, 1785 levels. Also, you will notice that in the last 3 quarters here, the DIs have started to buy the stock. The stakes have gone up from 17% to almost 19%. Second trigger that I see here technically, if you look at my screen, you will see in the last 1 year, the stock has been making higher highs. So from here to here, from here to here, from here to here, right? And the low also has been moving upwards. So from here to here, from here to here, and so on. And if you draw a channel, you will see an uptrend channel here, meaning that there is likelihood of bullishness in the next 2 years. Lastly, if you look at the valuation of Deepak Nitrite right now and compare it with other chemical stocks, you are going to see that much better PE than many other chemical stocks, and from a PB perspective also, it is not too high. So from a valuation perspective, it is not looking very overvalued right now in my view. Of course, I could be totally wrong about this stock, but I've given you a lot of points for you also to do some further research and take your bets accordingly. It's not a stock recommendation. Let's move to stock number 2, which is Delhivery Limited. Have a look at my screen and you will see stock prices of Delhivery Limited in the last 2 years. The IPO came somewhere in May 2022, and if you see this chart pattern here, it will remind you of Zomato's chart pattern. Let me show you very quickly. If you see Zomato's chart pattern here up until Jan 2023, it is a very similar pattern of where Delhivery is right now. Of course, Zomato started to rally from Jan 2023 onwards and have gone much ahead of the IPO price, but right now Delhivery is at a place where Zomato was in Jan 2023. And I know that there is no relation between Zomato and Delhivery, but there is something that you need to know. If you look at the Zomato's P&L chart, you will see that up until March 2023, Zomato was making losses, right? But only in fiscal year 2024, Zomato first time became profitable and delivered 351 crores of net profit. And the moment company became net PAT positive, what happened was the prices started to rally from here on, and the prices have gone much higher than the IPO prices. While if you look at the Delhivery's P&L, you will see here that the Delhivery has been also making losses, and as of March 2024, company made 249 crores of losses, much lower than the last year's losses, but the company is in losses. So the entire investing idea behind Delhivery is the moment the company becomes profitable and start to give PAT positive results, the stock prices are likely to go up. And before a company becomes PAT positive, what we really need to see is whether the company has become EBITDA positive or not. And if I show you the data of last 8 quarters, you will see a very good news here, positive trend here for Delhivery, that their EBITDA margins have gone from negative to now positive. And in fact, on a full year basis, if you see FY 2024, they have delivered EBITDA positive numbers as a whole. So hopefully in FY 2025, the company is likely to become PAT positive, and this is where the stock prices have the chances of going up. And if I just dig a little bit deeper, you will notice that 62% of their revenues are coming from express parcels, which is the e-commerce parcel that you and me get when we get an order from Delhivery, while 19% are coming from part truckload (PTL), remaining 7% is coming from truckload, and 10% from supply chain services (SCS). And if you look at the profitability at service line level, you will note that the express parcel business, which is giving close to 62% of the revenues, is already EBITDA positive. In fact, the EBITDA has gone up from 636 crores to 934 crores in FY 2024. It's the part truckload business, PTL business, which is around 19% of their business, is still EBITDA negative. However, you will note that the EBITDA has come down from 237 crores losses to 46 crore losses. So the moment PTL becomes profitable, their entire company is likely to become PAT profitable, and then stock prices are likely to appreciate. Lastly, from a cash flow perspective, the company is sitting on net positive 5,444 crores of cash, meaning that the company has sufficient working capital, because that is very, very important when it comes to logistic companies like Delhivery. Right now, if you look at the price chart in last 1 year, if you see, you will notice that at around 360 rupees level, there is a very, very strong support. As you can see, 15th of December, the stock fell to 358 level. Also during the 4th June election voting crash day, the stock took a support at 360 level. So right now the stock is trading at around 388 level. So in my view, the risk of investing in this stock is little lesser now, because it is not trading at a very, very high level. Again, not a stock recommendation, but I have just given you these price points also so that you understand a bit more about the stock. Lastly, from a valuation perspective, if you look at the PE ratio, you cannot calculate it because the company right now is not net PAT positive. That's why you can't even calculate the PE ratio. So it's a moot point. If you look at the PB ratio here, it is not highly ahead of what industry PB is trading at. So from a PB perspective, it is not looking highly overvalued right now. Moving on to third stock, I'm again going to pick up a stock suggested by Shoonya by Finvestia, which is APL Apollo Tubes Limited. In the last 5 years, the company has given multi-bagger returns, 922% returns in last 5 years. But in the last 1 year, company has managed to give only moderate returns of 28%. See, this company is India's #1 structural steel tube company, having a market share of more than 55%. And if you look at my screen, you will see that the steel tubes that they make is being used across multiple sectors. So for example, in the housing sector, as you can see here, the steel tubes being used in the houses takes 63% of the contribution, while commercial buildings like airports and railway platforms, etc., use these steel tubes. Also, infrastructure uses heavily these type of steel tubes, which is contributing around 13% of their revenues. Here are a few triggers that I think this company is going to do much better in terms of the stock price appreciation in the next 2 years. See, the company thinks that the momentum for F25 looks pretty solid, mainly because the private builder order book is going to go up after elections now. And as we know, 62%, 63% of their revenues are coming from the housing sector. So they are expecting a lot of demand to come from the housing sector. And on the back of that demand, company is projecting that they are going to grow by close to 20 to 25% growth in the next 1 year or 2 years. While you see last year the company only grew by 12% year on year. So from 12%, if company is likely to grow from 20 to 25% of growth, it is almost double the growth that the company is likely to achieve. Therefore, I think there is going to be a lot of attention given to this stock. Second trigger point is that in the last 2 to 3 years, the company has put in a lot of capex. Okay, 1400 to 1500 crores in their Raipur plant and 150 crores to 200 crores in their Dubai plant. And these products are going to come out in the next 2 years, giving the boost to revenues. And it will also take the ROC to 35%, 38%, because in the last few years, this investment that they have done is going to give better returns. Also have a look at my screen and you will see the new product pipelines that are likely to come out from their Raipur plant after this capex investment. And you will note that some of these products are going to be unique products. World's #1 thicker color coated product, world's first color coated structural steel tubes. So there seems to be some uniqueness in the products that the company is manufacturing. Also, if you look at the shareholding pattern in the last 3 quarters, FIs, the stake have gone up. The DIs have started to buy the stock. So again, these are all positive signs that we can see here. And if we take a 2 years time horizon, what company is saying is that they are going to touch steel production of 5 million tons in FY 2026. They have the capacity to do it. And if just to put this in context, in FY 24, they produced 2.6 million tons. So they are looking to double this capacity in the next 2 years, provided the macro conditions remain solid for the company to operate. If you look at the company's fundamentals, the company is sitting at highest ever sales in March 2024, fiscal year 2024, highest ever profits 732 crores in FY 2024. So from a fundamental perspective also, it's looking very, very good. From a cash flow perspective, having spent 1400 to 1500 crores just on the Raipur plant, company in FY 2024 is looking net positive. Net cash in FY 24 is 185 crores. Lastly, if I speak about the valuation, PE ratio is very, very high as compared to the industry PE. But please understand that you shouldn't be comparing stocks like Apollo Tubes to stocks like Jindal Stainless Limited. They are two very, very different steel companies. I would rather compare this with something like Tube Investment Limited. In that case, the PE and PB looks not too high. But still, I wanted to put it out that the PE ratio and the PB ratio is still looking very, very high when it comes to the steel as an industry. Again, this is not a stock recommendation. I've given you a lot of inputs for you to further study this stock and take bets according to your own portfolio. And lastly, if you want to get access to Shoonya by Finvestia, you can open a Demat account with them. I'll give you the link in the description or in the pinned comments. With that, I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.